step by step what I would have done differently if I was to start trading all over again. Hey guys, welcome back to my YouTube channel. If you're new here, it's Aurelie, a green forex trader who is documenting her trading experiences here on YouTube while sharing tips that makes her become a better trader every day on her channel. So in today's video, I want to share with you guys if I had to learn how to trade all over again, these are the things that I'll be doing that is going to make my trading journey less long and less stressful. So let's get into this video where I share a detailed plan step by step. And if you follow this plan, I've been following this plan for the past 6 months and it's been so amazing. So if you follow this plan in the next 6 months, trust me, you are going to love it. You're going to love the progress that you're going to make. And on this plan, the 3 last steps are very, very important, very crucial. So stay with me throughout and hope you enjoy this video. Let's go. Now, if you want to start learning how to trade, I'll advise you to have a plan. If you have a plan, these are the things you want to see in your plan. Number 1 is going to be your goal. What is your reason for trading? What is your why? Why did you choose to trade? Do you want financial freedom? Do you want time freedom? Do you want to be able to make so much money? Do you want to be able to take care of yourself? Different people have different plans. But for me, I choose to trade just because I wanted to be financially free. And aside from that, I want to be able to do whatever I want to do, however I want to do it. Because we live in a society where the moment you have money, you can access everything, including time. Tell me, like, I'm not even joking about that. So your why has to be very important. You need to have a very strong why. Now that you have your why, let's move to the next step. Think about something you need to sacrifice in order for you to achieve the goal that you want to achieve in trading. What is that thing that you're ready to give up on for you to become a successful trader? Trust me that trading will make you your journey, or on your journey towards trading, or in your trading journey, you're going to be very lonely. You have to be alone a lot of the time because trading has a lot to do with your psychological mind, or with your mindset, with your energy, with your, in fact, it deals with a lot with you than it deals with people. Another reason why I chose, no, I don't want to talk about that here. Let's move on. So you need to think about something you have to give up. Will you give up on partying? Will you give up on hanging out with friends all the time? Will you give up? But I'm not saying give up on your education. I will not advise you to do that. But you have to give up on things that don't benefit you, things that are not serving you, in order for you to become a good trader. Now, I am reading from a book, so if you see me looking down, I literally made notes so that I don't want to fumble this thing. But you have determined your why and what you are willing to give up on. Now we have to determine the kind of trader that you're willing to be. The type of trader you are depends on the personality, on your personality. This is what I mean. If you are someone who is very patient, you can either be a day trader or a swing trader. If you're someone who lacks patience, then you can easily be a scalper. There's a difference between these 3 people, and I've made a video where I was talking about the difference in more detail. So if you want that video, I'm going to leave it somewhere or in the description box. You can check that out. This is one of the most important parts in your trading plan. There is one thing that the moment you see how traders live their life on social media, you are like, oh, this is what I want. There is something that they don't show you. You will get depressed. You will cry a lot. You will lose money. This money part can be avoided to some extent, but as a trader, I don't know a trader who has never lost money. I don't know any trader who will tell you boldly that, oh, I've never made any losses. It does not exist. Now, you will lose money, you will be depressed, you have a lot of sleepless nights. Sometimes you want to sleep at night and you think about your chart, you just get up just like that. That is how it is. That is how it is. If somebody comes and tell you, oh no, it was not like that for me, I think they are lying. I don't know, but I feel like they are lying. We have that out of the way. I have given you what you should be expecting as a trader. Let's move to a 6 months plan that if you follow this plan religiously for 6 months, trust me, you are either going to become a better trader if you're a trader already and you're still struggling, or you're going to become a good trader in less time that it took me if you're a beginner. Let's go. For your first 1 month, don't go on the chart. Don't try to understand what the chart looks like. Focus on baby pips. Why am I talking about baby pips? Baby pips is literally where you're going to have your basic knowledge of trading. A lot of people walk into the trading industry, or the forex market to be precise, without knowing exactly what forex is. So you need to know what it is before you are investing yourself inside of it. Now, I feel like this thing is like, it's like a cult. When you're in, you're not out. I don't know. I feel like forex is like when you come in, you don't go out. So you need to know all what forex is. Baby Pips is going to help you with that. For 1 month, you're going to tell yourself every single day. I am not telling you that you have to sit for 5 hours and study. No. Give 1 hour of your day. Every day we have 24 hours. So you're going to choose 1 hour of your day. You sit on your desk, no disturbance, and you learn for 1 hour on Baby Pips. You read Baby Pips. It's not long, it's very short. I think even 1 month is a lot. Let's say 2 weeks. It depends on the type of learner. If you're a fast learner, 2 weeks can be fine. But let's say 1 month, right? When you are done with Baby Pips, now we move to the next stage. You have to pick a strategy. Now, when it comes to trading, yes, every single strategy works. They might not have the same risk to reward ratio or the win rate, but same win rate, but every single trading strategy works. I don't care what anybody has to say. The win rate for strategy A is not going to be the same with strategy B. However, every single one of them works. Good. Now let's move on to the next thing. Now that you have picked your strategy, we have SMC, we have ICT, we have support and resistance, we have pattern, we have week off. There are a lot of strategies. Now, the moment you start jumping from one strategy to another, that is what is going to make your journey long and stressful. Pick one. If you are following me, and I'll advise you to look to, that's my advice, you don't need to take it, but I'll mostly advise people to trade SMC. The reason I'm talking about SMC is that SMC is less difficult. I don't say it's not difficult at all, but it is easy to comprehend, it is easy to understand, and it's easy to follow. Now that we have a strategy on desk, we are talking about SMC in this video. Let's keep it moving. Thing you have to learn is candlestick psychology. I don't know if I should make a video on candlestick psychology, or I can recommend a channel where you can watch a video on candlestick psychology. Now, you need to understand the psychology behind every candlesticks. We have 2 candlesticks. We have the bullish and the bearish. Bullish means we are buying, and bearish means we are selling. Bullish means we have buyers in control of the market, and bearish means we have sellers in control of the market. Now we have the doji candlestick. The doji candlestick simply means that there is indecision between buyers and the seller, so nobody has control over the market, right? Most often when the market is at a support level and we form a doji candlestick, that means that support is buy. So that means buyers are about to enter this market and push the market a little bit forward. So that is literally it. I don't know if I should make a video. Okay, I'll recommend a channel. You can follow this channel here, and it talks literally about candlestick. This particular video talks about candlestick psychology. Now that you have understood candlestick psychology, let's move to the next thing: market structure. Market structure is very important. So you will take your time every day for 7 days, 1 hour a day. You're going to watch either Solomon King, this particular video, or you're going to watch Phantom Trading, this particular video. No other one, just this. If you choose one of them, but you're watching just one video, repetition is very, very good. Anything you do consistently every day, that is how you build knowledge. So now that you have your strategy and you have your structure, you are going to learn structure. As I was saying, you're going to learn market structure every day for 7 days, 1 hour of your day. So when you get up in the morning, I don't care the time, you sit on your chart for 1 hour, you're learning only market structure that day. After 7 days, you are done. You move to the next thing: fair value gaps. Fair value gaps, again, you recommend this video and this video. You have to choose between both of them, or if you can do both, fine, but these videos are the videos that help me with fair value gaps. When you understand fair value gaps, the next thing is going to be order block. You're going to study order block. Each of these things that you're studying, you're doing it repetitively for 7 days, 1 hour a day. You're done with structure, yes. The next 7 days is going to be other fair value gaps. Then the next other 7 days is going to be other blocks. Now that we have this out of the way, let's move forward. Next thing is going to be liquidity. When it comes to liquidity, this is what I recommend, and this. You have to study liquidity from these channels, and you are going to understand exactly what liquidity is. For us to have a complete SMC, we need breakup structure, liquidity, fair value gap, and other block. That is what we need. Now that we have all of this is the time for you to go to your chart. Remember that it took you 1 month for baby peeps, 1 month to learn the different part of your strategy. Now it's time to study the strategy on the chart. Depending on the type of trader that you are, remember I talk about trader type, right? If you are a swing trader, you're going to focus on the weekly, the daily, and the 4 hours. If you are a day trader, you're going to focus on the daily, the 4 hours, and the 15 minutes. If you are a scalper, you're going to focus on the 15 minutes, the 5 minutes, and the 1 minute. Now, let's assume you're a day trader. You go on the daily time frame and you try to look at structure, fair value gap, order block on that time frame. You need a notebook. In your notebook, you write everything that you are seeing, how often you see it, right? That is how I did it. You write, for example, you go on the daily time frame and you are like, on the daily time frame, I see fair value. I see that there is a break of structure. When price breaks structure, it leaves behind an order block and a fair value gap. Then price comes back and tap into that order block or fair value gap. Then it continues the trend. That is how you can do it. Now that you've done that, the next thing you have to do is you go back now to the 4 hours time frame. The 4 hours, you do the same thing. Price created a break of structure, then it left behind this and that, then price came back to that point that it left, right? That point of interest, the fair value gap or the other block. Then it taps into it and it kept on moving. That is it. You do the same thing on the 15-minute time frame. That is how you study your strategy. You've studied it multiple times. You do that, just studying that strategy, it's going to take you another 1 month. So we have 3 months down. Now that you've done all of this, you need entry confirmation. Remember that your entry confirmation is your lower time frame. For you who is a scalper, your entry confirmation is going to be the 1 minute. For those who are day traders, it's going to be 15 minutes. And for those who are swing traders, it's going to be 4 hours or 1 hour, if I'm not mistaken. Now that you have your strategy, you need to understand what you need to see on the lower time frame for you to enter that market. I think you can do this with studying your strategy the same month, right? Okay, for example, I'm a day trader. On the 4 hours, I saw this and that. On the 15 minutes, which is my entry confirmation, for day trader, your entry can be 5 minutes or 15 minutes, but most often people choose 15 minutes. So on the 15 minutes, I saw this, and that is what made me to enter this market. Now that you have studied your strategy so well, 1 month, you can do a lot every day without skipping a day, from Monday to Sunday, every day for 1 hour. Now that you've done that, this is where you go and backtest. Backtesting is very, very important. I don't know what people say. I don't know why people say, oh, it's not necessary. It is necessary. Backtesting is like you're putting yourself in a space where, oh, if I was to enter this market, this is what I would have done. This is what I would have done, without seeing what is ahead. You literally have that plan there. Then when it starts happening, you're just executing. That is all. That is what backtesting is. Now that you have backtested, you need at least 1 month again to backtest, or 1 or 2 months. We have 4 months down. I think it should be 5 already. This is where you go and purchase. I'm not saying fund a $10 account. If you're trading with a $10 account, I'm not going to lie to you, it's going to stress you a lot. Now this is where you go, that money that you want to fund an account with, buy a prop firm. No matter how cheap that prop firm is, buy a prop firm. The minimum amount should be $5,000 for your prop firm. You buy a prop firm. The reason why I'm talking about buying a prop firm instead of demo trading is because with a prop firm, you are attached to that account, right? Now, this is going to help you manage your emotions, manage your psychology, and understand yourself even better. This is where you start trading from that prop firm. That is what I did with the prop firm that I'm working with right now. I did not buy this prop firm because I wanted to make money out of it. I bought the prop firm because I wanted to test my psychology and my strategy at the same time. And trust me, so far it has been such a beautiful journey. It's giving me more clarity, because as a trader you need clarity. You need a lot of clarity. You need your mind to be, you need that, okay, if I'm doing this, or if I took this trade, this is the reason why I took this trade. Now when it comes to you have purchased your account, this is where the other part of the work comes in. You need to journal a lot. Let me show you how I journal my trades. Let me take this example for the trade I took on yesterday, which was Monday, because I'm definitely going to upload this video today. Now I have this table here. For this table I have pairs, I have the dates, I have results, and I have my intended risk to reward ratio and the actual risk to reward ratio that the market gave me, because currently my risk to reward is 1:2. I want to upgrade my risk to reward, but I want to see how much it gives me more. I have done this before, but it was mostly like when I was writing it down. I don't know if I can find it easily. No, I cannot find it easily. So we are going to focus on this. You have this table, intended risk to reward and actual risk to reward. Now that you have this, you are going to write the lesson that you learned. At the end of each trade, you write the trade that you took, the name of the pair, the date, was it a win or a loss, the risk, intended risk to reward, the actual risk to reward, and the lesson you learned. Cool. If it's a win or a loss, you are going to learn something. Now before you take the trade, this is after, before you take that trade, this is what I do. On Monday, you write literally what you saw in the market that made you to take that trade. For me, I said this: the 9 p.m. closed the 5 p.m. high, right, with a body, which is a bullish sign, and that was the sign for me to look for buys. So I went to the lower time frame, 5 minutes, and waited for liquidity sweep, change of character, and fair value gap. Then I took the trade. This is what I saw. This is why I took this trade. Now I'm going to come, before I take this trade, then I take the trade. When I've taken the trade, I write everything and I write the lesson. If there is it was a losing trade, because this trade was actually a winning trade. However, if it was a losing trade, it would have been different. What I would have done is write the lesson here. The lesson would have been, maybe I didn't follow this plan here. This is the plan. This is the result. Good. Now another little thing that I do is I draw exactly what I saw. You see that here I drew the candlestick. This is exactly how the candlestick was looking. Then the confirmation time frame, which is a 5 minute, this is how it looks like. So you are going to do this over and over and over again. You are going to make mistakes. It's normal. I make mistakes as well. Even up to now, I still don't make mistakes. Those mistakes are going to help you grow. That is why you are journaling your trading journey. It is a journey for a reason. You're going to make mistakes, which is normal. Now these are maybe the two last things that I have to say before we close this video. Is treat trading like a business. This is what I mean. It is not every day you go to the market that you're going to make sales. This is a mindset that I really love now that I'm having it. It's so good. When you go to a market as a seller, whatever you're selling as a business person, some days you're going to make profits, some days you're going to make losses, some days you're going to sell, some days you're not going to sell at all. That is the same thing with trading. Some days you will make money, some days you will not make money, some days you will hit stop loss, some days you will miss your trade. It is just like that. Now on the days that you make money, you feel grateful. You ask yourself, okay, why did I make this money on this particular trade? You understand why you did it, then it's fine. On the days you miss trade, you consider that, okay, you did not make money and you did not lose money, but you missed an opportunity to make money. You get good. Now that has happened, you're still going to write, why did you miss that trade? What happened for you to miss that trade? So that next time you're not going to miss that trade. Now, in case of you hit stop loss, that means that day you sold your product at a loss, right? You did not make money that day, you lost money. So you saw your product at a loss. What made you sell this product at a loss? Why did you hit stop loss? You're going to write that down. Doing this every single day you take a trade, it is going to help you. Plot twist, this is the last thing that I'm going to say, and this is going to be the end of this video. Go back to your chart at the end of every trading day and see what happened that day. This helps you it helps your eyes to quickly captivate your entries, your exits, your strategy in general. This is what I mean. Personally, every day I sit on the chart and I'm looking for a strategy, right, or for an entry. If I see my entry at the end of the day, at the end of that trading day, I will go back and backtest that era. Let's say okay, for me, I look at sessions. Basically I work with the 5 p.m 9 p.m, and my entry should be at the 1 a.m. So I will go back at the end of my trading day and I'll look at what happened between 5 p.m and 9 p.m. When I see that, I want to see what I would have saw or what happened in the market between 1 a.m to 5 a.m. What I would have saw that made me take that trade, or why did I miss that trade at that period? What would I have done differently? Was there a fair value gap? Was there an order block? Was there a liquidity? Is that what I should be looking out for more? If it's an order block, should I be looking out for order blocks more? If it's a fair value gap that price tapped into before moving to my direction, should I be looking at fair value gaps more? That is literally what I mean. So you do that every day. If it's on Monday that you have to trade, on Monday at the end of the trading day, you go back and analyze that session or analyze that chart or that period. Then you do that again at the end of your trading week. You analyze for the whole week with writing facts. Then every week you go down and write your facts. Last thing, create create a group. I don't care if you're going to add people in the group or not. Before I started adding people in the group that I have, my group, I was alone in that group. So create a group for yourself in the beginning. You drop your charts there, right? Every trade that you take, the winning trade, the losing trade, you drop them there. You're going to go back to those trades years from now or months from now, and you're going to feel so grateful. Now, I feel so grateful each time I look at the trade that I've been taking, and I'm like, wow, there is progress. Wow, you're doing great. Wow. If I was to follow my risk management, this is what I would have done. This is what I would have done. Then I forgot to talk about this one. Sorry. Risk management is very important. It is very important to have a good risk management. If you don't have a good risk management, you're going to stay in this industry for a very long time. So these are the things that are going to help you to become a better trader. And it is going to help you understand yourself even much more. Writing is very important. Repetition is important. Consistency as well is very important. And thank you so much for staying with me throughout this video. And if you have any question at all, you can leave them in the comment section. And I have a group where I share my setups in, and I give little tips here and there when I can. So if you want to join, you can follow the link in the description box and join the group. Also, I left a link for my referral code. Is that how they call it? For Funded Next. And you can purchase an account with Funded Next, and they're going to give me something small, please. Okay, thank you so much for watching this video. Please do not forget to like, comment, subscribe, and even share it if you can. Thank you so much, and I'm definitely going to see you in another video. Bye.